I want to replace her. I want a new co-star.
It's too short notice. We can't replace talent at this point.
But your face is like you're okay. Are we okay? I promise. Okay. And we're going to be talking about first-time home buyers and like what that experience looks like or what steps they need to take to start looking into purchasing their first home. So what's the first thing you would do?
Kind of like a first-time home buyer guide without the guide.
Without the guide, yeah. There you go.
Okay, so first for me would be to find my lender. And the reason why I would want to find my lender is because I need to know what I qualify for.
Yep.
Not only what programs I qualify for down payment-wise, but payment-wise, right? Monthly payment-wise. I might want to pay $2,500 a month.
Yeah, I think the other part to it too is you want to make sure that you're figuring out what your budget is out of the gate so that you're shopping in your right price range. You're not getting your hopes up to find like this beautiful house that's $20,000 outside of your budget. So having that starting point of how much do I pre-approve for? And then also, what does my closing costs look like? And do I have enough saved to put down payment and pay down payment and closing costs? That way you're not looking at things that you might not be able to purchase, right?
Not only that, for my first-time home buyers, normally they have a family. Mm-hmm. And normally they have a child who will go into that house and pick out their bedroom. Yeah. And, for me as a loan person, I don't want to let that family down. No. So when I'm pre-approving somebody, it's, hey, you qualified to spend X. And that's what you should be out looking at.
Right. So the first stop is get to your lender, figure out what your budget is, what your comfort zone is with payment, and how much of a house can you purchase with that comfortable payment that you're looking for.
All right. So I have a question for you.
Yep.
So I'm a first-time home buyer, and the process is already scary to me.
Yep.
And you've given me list number one, task number one, which is find a lender. And I don't know where to start.
And that's a great point. So in a local market, there's a couple ways you can do it. You can reach out to a realtor. If you have a trusted realtor that maybe has helped some of your friends or family, you can ask them for a referral. Typically, realtors will have that person that they've done a lot of business with, they feel comfortable and confident in. If you don't have that option, you can ask family, friends, coworkers if they've had a good experience with a local reputable lender.
Everyone we know of has purchased a house, right? It's like, I guarantee you, if you ask around, somebody owns a home and they've used a local lender. Yep. And they may give you good things about them or bad. So it may steer you away or steer you towards that lender.
And so if you have no sphere of influence, maybe you're new to the area, you can also try Google reviews. And they'll stack them up with who has the most and read through some of the reviews. Maybe call around and get a feeling of how you connect with that person, because it's a 30, 45 day process from start to finish once you're under contract. You want to be comfortable with the person you're working with. You want to trust the person you're working with. So first stop is to find that lender. And then once you meet up with a lender, what are they going to do for you? So what's a lender looking for when they're talking to a borrower? The first thing they're going to do, right, is pull credit.
Well, let's start with the application,
okay?
Right? Because that's typically the first thing a lender is going to do. They may ask you some questions and get to know you, but in the end, they're going to want you to fill out an application. And for me, first-time home buyer, Vito, is, that's scary, right? What kind of questions are they going to ask? Am I going to know the answers to those questions, right? So let's talk about how people typically apply first, right? So if I want to apply for a mortgage loan with you, Deanna, what are my options?
So I think our entire team believes you meet the consumer or the customer where they're at. Some people are very comfortable with using online platforms. So we have an online application that a borrower can download right to their phone and fill out all the information and shoot it back over to us. Others prefer for us to take it over the phone because they don't want to be bothered with the technology piece. Yep. And, still today, which has changed a lot over the years, but some people still prefer to walk in and sit down with you, shake your hand, and get to know you and know that you're in the community. You actually have a brick and mortar office. Mm-hmm. So we offer all three options for our borrowers. We want to meet them where they're at.
And to take it one step further, we actually have had borrowers that want a piece of paper that they can fill out.
Yeah.
We can do that.
Yeah.
All right. So
that's not so scary because you have all those different options so that you don't feel alone. Like if you want to get on the phone and like chat through the application with a loan officer, that's most companies, most reputable lenders have some sort of format like that. Don't you agree?
I agree. And then, so the next scary thing for me as a first-time home buyer, and none of these things are really scary once we walk through them, is, well, what kind of questions are they going to ask? And am I going to know the answers to those questions? And I think to make you guys feel better about this, like the loan originator is going to ask you things that you're going to know off the top of your head. You know, first name, last name, where you live, where you work, how much you want to put down, which you kind of want to pay per month or trying to get an idea. Mm-hmm. Child support, alimony, bankruptcies, foreclosures, judgments.
So let's stop there. So a lot of people will delay purchasing their first home because maybe they've had a bankruptcy or a divorce that's created some kind of credit issue. Mm-hmm. And I think that it's not widely known that you don't need perfect credit to purchase your first home.
Not at all. Not at all.
So kind of back into that, like with an FHA loan, you can be 1 year out of a Chapter 13 mm-hmm. and qualify to buy a primary residence.
Absolutely.
And so I think the first thing is to get over the fear of being told no, mm-hmm. because getting our eyes on that credit report is going to help us guide you if it's not right now, give you a timeline, see how long it's going to take to get those things taken care of.
So I always tell my borrowers, I don't really deny people. I give them a roadmap to homeownership. And that map, you know, let's say they don't qualify today at this second, right? That map might take a borrower 30 days to complete or 3 years, just depending on their situation. Mm-hmm. But we're going to give them a definitive, hey, if you do these things, it's likely you're going to qualify to buy a home.
Yeah. So it's not now, not no, but not right now.
Right.
Yeah. And I think that's really cool because some people are so intimidated by walking into a bank or into any type of lending institution and applying for a home loan. So if you can get some of that fear out of your way and know that people are there to help and it's not a no, it's not right now. So next thing they have to do is kind of figure out what the down payment looks like. So, you know, with a conventional loan, they could put as little as 3% down.
True. Yep. Absolutely.
And FHA is 3.5%. Mm-hmm. But we also have down payment assistance programs available in most communities that help with low to mid level income earners to purchase their first home. So let's talk about a little bit about that. If you don't have all the money saved mm-hmm. and you qualify for one of these down payment assistance programs, you can literally get the majority, if not all of your down payment and only have to come up with the closing costs.
Right. And then if you have a stellar real estate agent, depending on the house that you're picking out, you might even get the seller to pay your closing costs. A little harder in today's market where there's multiple offers.
But possible.
Yeah.
So now we've met with the lender. We've talked about down payment. We've talked about whether I'm going to use a conventional or an FHA loan, depending on our credit and DTI. Mm-hmm. And so the next thing we're going to do is break down the closing costs. Who gets paid what? So first thing a person has to do is figure out that their down payment. So on a $200,000 house, 3.5% down.
$7,000.
$7,000. Is that all that the person has to come up with?
So no, you have to pay for an appraisal, right?
What is an appraisal exactly?
Well, very good question. Thanks for asking that question.
Yeah.
So the bank or the lender is going to need a third party to go out and evaluate the property or the home to give us market value, to make sure there's no health or safety issues, it's not really a home inspection. It's more of, hey, the property is worth this based on the homes that have sold in the neighborhood recently. And no, there's no health or safety issues, or these items need to be addressed.
So the lender orders the appraisal.
The lender must order the appraisal. You cannot. Well, you could order your own, but the lender can't use it. So the
that you choose is going to order an appraisal, and that's going to give them the number they're willing to loan on.
Yes.
So they're going to loan on the lower of the appraised value or the contract price, correct?
Purchase price. Absolutely.
Yeah. So step one is you find your lender. Step two is you figure out which program. Then you start talking about closing costs. So we've gone over, you have to order an appraisal. And then there's lender fees, right? So there's always an underwriting and a processing fee with most lenders. And then everything past that is all third party. And people seem to get confused about who gets paid what. So you've got a title company that's involved. And so the title company is going to prove that the property itself doesn't have any liens or encumbrances.
Clear and marketable. That's what I call it.
Clear and marketable.
Clear and marketable title.
Right. So they're going to charge for their services. They're going to charge to close the actual transaction. That's the company you'll go to sit down and sign all of your paperwork.
The day of closing.
The day of closing, yeah. And then there's doc stamps on the deed, which is a Florida state tax.
Right?
And doc stamps on the mortgage.
Survey.
Escrow
what's
accounts.
A survey?
Yeah, that's a good question. So I always tell my clients, have you ever driven down the road and seen all the little sticks in the yard and with the flags on them? And that's when a property's been surveyed. And so what they're looking for is the property lines to make sure that you're not encroached, like your fence isn't on your neighbor's property line. So they're looking at the property lines and the footprint of the house.
I'm encroached on this table right now. My fat's hanging over this. No, but in reality, the survey is making sure that the property you're buying is holding the house you're buying, and the neighbor's pool is not on your property and your fence is not on his property. Yeah. It's kind of setting the boundaries.
So the services that are included in closing costs are going to be your survey, your appraisal, your title company, and you got to pay your taxes. So those are the recording fees. But then we didn't talk about escrow accounts. So escrow accounts are a big deal. And a lot of people get confused as to, hey, I've got to pay my first year's homeowner's insurance in full at closing, but now you want to collect a couple of months too. What's that all about?
So an escrow account to me is taxes and insurance, right? It's not a closing cost. It's we're paying the taxes and insurance on your behalf. So you're buying a house. The house has insurance. Let's say the insurance is $1,500 a year. When we have you bring your cash to close, we're going to have enough money to pay that first year's of insurance. And we're going to prepare to pay next year's insurance, right? So we're going to put a little money aside in an account. And then every month you make a payment, we're going to put a little more money aside so that when your insurance is due, it's already going to be paid. It's set aside in an account for you on your behalf. So
basically they're paying that first 12 months that the person owns a home in full at closing, collecting that whole thing. And then they're starting those accounts as, like, I like to refer to them as little miniature savings accounts. And they just slide in a 12th of your tax bill and a 12th of your insurance bill. And then hopefully, and I say hopefully.
Because what goes up for the rest of your life?
Taxes and insurance.
Till you die.
Till you die.
So most of your mortgage payments, the principal and interest will be fixed. There's a very small percentage of mortgage loans that are originated in the United States that are not fixed. I think we're almost at 99% at this office right now. So your principal and interest will never go up, but your taxes and insurance, you could expect to go up for the rest of your life.
Yep.
So Deanna, one thing we missed, right, when you meet that mortgage loan originator in person or over the internet, is most likely he's going to ask you for some documents, right? Before he pre-approves you, he's going to, I make $60,000 a year, right? But you might only make $58,500, right? We want to know the exact amount. So in order to figure that out, we're going to ask you for documents based on what you do for a living. So self-employed is different than W-2'd, right? So what's some things that you would want to review up front?
So I would want, if it's a W-2 borrower, I would want to see at least one pay stub, the last year's W-2. I would ask for 2 months bank statements showing that they have the funds to put down and put down on the house and pay their closing costs. And I like to get a full file up front. So I would go ahead and get the driver's license, get all that put together. And I guide my clients and tell them the best thing for them to do is to use our portal. So the portal will allow them to upload those safely. And if they don't, they can also open up a Google Drive or a Dropbox and share that link with us. Okay. And that kind of keeps everything in one local location, and they can, start to save like their loan approval, their pre-approval, and have everything about their house in the Google Drive or the Dropbox labeled "My First Home."
The Google.
The Google. Yes.
So to sum that up real quick, you said W-2 employee. To me, that means somebody who does not have ownership interest in a company.
Mm-hmm.
They make a weekly, biweekly, or monthly paycheck.
Correct.
That taxes are taken out of.
Mm-hmm.
And at the end of the year, they receive a W-2. That's why we in the mortgage business call them a W-2 employee.
Yep.
So for the W-2 employee, like she said, pay stub, W-2, driver's license, maybe some bank statements to show that the funds you need to close are physically in your account. Yep. And they're not hidden under the mattress because we can't use that.
Right. So we don't want to have money that's in your sock drawer at home. It has to be sourced and what we call seasoned, meaning we need to see where it came from, and it needs to be in the bank for at least 30 to 60 days.
Wait, so you said seasoned, and all I'm thinking about is chili cheese fries. What what does seasoned mean to you?
That it's been in a bank account for a period of time.
Okay.
Yeah.
Good.
So then when you look at the other items a person might need, so those are the basics, but some borrowers will have, like, they'll own other houses. Maybe this is their first primary.
Yep.
Or maybe they have ownership, like they inherited a property. So if they own any other properties, we'd have to get, taxes, insurance, and things like that.
Yeah. So if you own multiple properties, most likely what I'm going to ask for is a mortgage statement if it's mortgaged,
Mm-hmm.
a tax bill, because if you own a property, it has taxes, an insurance statement if you have insurance. So you could own this piece of land free and clear and choose not to insure it.
Yeah. And those documents don't really apply to the first time home buyer, but in the grand scheme of things, we don't always collect just the basics.
Yep.
It depends on the scenario and on what a person has. So like if you've been divorced, we're going to need a copy of your divorce decree. But if you've never been divorced, well, obviously we wouldn't ask for that. So just kind of a basic rundown of what people need. So we talked about how they apply. So they've applied, they've submitted documents. And the first thing we're going to do is pull their credit, right?
Yep.
So we're going to pull their credit. We're going to look at any outstanding debts they have, if they have any collections, foreclosures, bankruptcies. What else are we looking for?
Well, we're looking for all of their total liabilities, right? So as a lender, we're going to look at how much you make and how much you're currently spending. Mm-hmm. And that's going to leave us with how much you can spend on a house.
That makes a lot of sense. So you take all their debts,
Yep.
you add them up. And so are you looking at the balance, or are you looking at the monthly payment?
So it depends on if it's a student loan or, let's say, a car payment, right? So let's talk about a car payment. It's easy. We have a $745 a month car payment, clearly a nicer car than mine. So that reduces the amount you could spend per month by $745, right? So let's talk about student loans real quick, right? Mm-hmm. So let's say I have a $100,000 student loan that's deferred because of COVID. So do you leave that as a zero payment, or is there a number that you use as a lender for that?
There's a number. So you're going to use 0.50% of the balance as your payment, unless you can proof the payment through the credit or through the.
So 0.50, just to stop on that, a lot of people are like, well, what does that mean? So on $100,000, we are going to attach a $500 a month payment to that student loan. So no, we're not making you pay $500 a month, right? We're simply just saying we're allotting $500 a month towards that liability.
Now there's some time, some wiggle room there. So if a person's in what we call an income-based repayment program,
yep.
That's one that we don't have to use that
as long as we can document it.
As long as we can document it. So that's one of the things that we look at. We look at, do you have student loans? What type of program are they in? What's the balance? And how do we calculate that minimum payment if there's not one on the credit report? So those are all the things that we're looking at on a credit report. Now we're moving into, like, what shouldn't you do after we pre-approve you? Like, what are some of the major things you see happen? And you're just like, gosh, I wish they wouldn't have went out and bought that new furniture for the house they don't own yet.
That's my favorite. My favorite thing is once you are pre-approved, so you've left the office or you've completed the application, you've uploaded all your documents, the lender has talked to you about down payment and payment. They provided you with a pre-approval letter that you could use to go out and shop for a home, right? But what will disqualify that pre-approval letter, right? It's pretty much you, right? So, that shiny new car comes available for sale and it's not on a 7-month COVID wait and you just have to have it now. Well, I hope you can live in that car because that car may change your approval.
Yep.
You know, you go from a $250 a month car payment to $1,000 a month car payment. It changed your numbers by $750 a month.
So no major purchases.
No, yeah, I'm sorry, I was getting there. No major purchases.
So we're not buying furniture. We're not buying a jet. We're not buying a new car, a new boat. We're going to save all of that until after we buy our home, right?
I would like to say your lender is your best friend during this period of your life, and you should pretty much call and ask your lender before you buy anything. I mean, I'm not talking about, you know, going to buy lunch, but anything that's major, you should have a discussion to make sure it doesn't affect your family and your children.
And one of the other things I like to point out to my clients is, you know how you walk into Kohl's or you walk into JCPenney's or Macy's, hey, you get 10% off if you apply for a card.
Does anyone know what 10% off $10 is? Like, you're going to sit there at the cashier and like, oh, yeah, it sounds like a good idea. It's $1.
Yeah. And then there's an inquiry on your credit report. So now we have to explain what that was. And did you open new debt? So those things
and provide evidence of what the payment is.
Yes.
It's just a paperwork nightmare.
So we're not going to get our credit pulled. So the second thing on my bullet point list is don't quit or change your job without talking to your lender.
Don't quit or change your job at all. I mean, I guess there's circumstances where this is acceptable and we can document it and show it, but don't quit your job because we're qualifying you based on the income of that job to buy the home.
My favorite phone call I ever got from a client
day before closing
was, hey, Deanna, I'm closing tomorrow. I just wanted to double check. Is it okay that I got fired today? No. Very sad story, but so don't change your job. Don't try not to lose your job. And don't quit and move on to a different type of job. Don't deposit cash.
So don't move large amounts of money at all. Yeah. Right? If you have 3 different accounts and you want them all in one account, just don't do it. Okay? If you've got to,
you sound very passionate about that.
Don't do it because it creates document nightmares.
Don't do it. You're like twitching.
Paperwork nightmares. It's insanity. So listen, don't move money during a transaction. Let's just pretend you're getting money from mom or dad for your down payment or closing costs in a source of it's going to be a gift.
So what I would say is,
I would ask my loan officer.
There it is.
What should I do? Mom's going to give me this money. How is she going to give it? Well, she has a suitcase of money. No. The way you accept a gift for a mortgage transaction is the most important part, right? You can't accept $100 bills from your parents and expect to use them for a mortgage transaction.
So in my experience, it's always best to get that gift just wired directly to the closing table of whatever title agent you're using. Kind of take some of the paperwork out of it.
Yeah. So traditionally, here's what we do. Once we find out there's a gift, we provide a format gift letter for the giftor to fill out. They're filling in the blanks. This is really easy. Like, I'm giving a gift of this amount. It's coming from this account, from this bank, from this person. This is my relationship. Sign and date. The person on the loan signs and date. We provide it to an underwriter and say, hey, listen, so-and-so is getting a gift for this amount from this account and this amount from this person, from this bank, and they're going to get it at closing, right? So now we don't have to show the money sitting in their bank account. We don't have to show the money sitting in their bank account. We simply show on a conventional loan that title has received the gift from the parents, from the exact account that's on the gift letter in the exact amount that's on the gift letter. And then that solves all of the conditions for the gift. Now, on an FHA loan, that changes a little bit. So conventional, all we need is a gift letter and providing evidence that the gift was sent or received, right? On an FHA loan, what's that one extra document we need, Deanna?
We have to get a 30-day statement from the donor. So whoever's giving the gift will have to supply a 30-day bank statement showing that they had the ability to give the gift. And so all we're looking for is to make sure that if you're getting a $5,000 gift, that you didn't go and deposit $5,000 into mom's account and then have her write you a check or send the wire.
Right. So we're just showing that the giftor has the ability to give a gift, right?
Correct.
So mom and dad, sometimes are not excited about sharing the information on their bank statements with their children. So how have you overcome that in the past?
Usually we'll just have the mom and dad send us directly the bank statement. So it doesn't have to go through the children's hands or
Right.
through the cousin's hands or whoever's giving the gift. They can send it right to the loan officer and borrower never sees it. So
Got it.
That's a good way to do that.
Got it. All right. So next step, we have our pre-approval letter. We're on our way to shopping.
So finding an agent. How do you go about finding that agent to buy your first home? And so kind of along the same lines as finding your loan officer, you're going to ask for recommendations. Your loan officer might have some recommendations for you. They tend to work. We tend to work with realtors on a regular basis and usually have a group of realtors that we can.
But isn't everyone in the state of Florida a real estate agent?
I was about to say, so I think
Like everyone's mom or cousin, is a real estate agent for family members.
I always joke that when you move into Florida, the state of Florida, it's a prerequisite that you have to get your real estate or mortgage license to live here.
Well, yeah, and then you buy a Lexus SUV, like the small one,
Yep.
and a Hurricane deck boat.
The Hurricane deck boat is like that's like the consolation prize when you're coming in the state of Florida. They're like, here's your Hurricane deck boat.
Here's your real estate agent license, your Hurricane deck boat, and your Lexus SUV.
Yeah.
Right. Okay. So one thing that I would do is make sure they're a full-time agent.
Yeah.
This is what they do for a living.
Yeah.
So not only did your cousin Jimmy refer you to them, but look at the reviews.
Yeah. And you want to make sure that they're practicing it as a professional. So I like to refer to it as hobbyists. Mm-hmm. We have hobbyists in the mortgage industry. We also have them in the real estate industry where they got the license so that they could help friends or family as it plopped into their lap, but they don't work that job full time. So you are looking for a full-time loan officer, a full-time real estate agent. They're going to have the experience you need about the market and how to write contracts and contract law and so on.
Okay. All right. So in today's market, it's probably pretty hard to find a home, right? So you got to make a list, and this list has got to be needs and then wants, right? And then sometimes your wants are, it's.
You have to sacrifice. You have to compromise on where your location is. Mm-hmm. So your budget you might want to live in the city of Fort Myers, say, for instance, but your budget doesn't have the bedroom count in the city of Fort Myers. So you might have to go out to Cape Coral or to San Carlos Park or Lehigh Acres. So, always thinking, what do I need? What's the absolute necessity?
Like, let's say bedrooms. Like sometimes bedrooms is not an option. I have 3 children.
I need 3 bedrooms.
Well, and then I have my wife and I. So technically I need 4 bedrooms, right? 1 for each child, 3 children, and then 1 for my wife and I. Why are you looking confused?
Oh.
I physically don't have 3 children.
That's why I'm looking confused.
I'm pretending like I'm a buyer. Okay. So needs versus desires, right? So I would think bedrooms is on the need list, right?
Absolutely.
You have a certain amount of people in your family, and each one of them needs their personal space. Mm-hmm. We call those bedrooms.
Is that what we call them?
Yeah. So
what's the alternative name?
I don't know.
Sleeping quarters.
Sleeping quarters. But your agent, when you're speaking to your real estate agent, is going to ask you for your list of needs and wants, right? So bedrooms is a need. A pool may be a nice to have,
but it's a want. It's not a need. Yeah.
And a location is a want. Unless it's like I have to be within this area because of a school. Mm-hmm. So you'll provide all of these needs and wants to your real estate agent. Most of the time, I believe they send you emails with all of the listings that kind of fit into your box.
Yep.
And then you're going to have to pick through them.
Yep. So one of the things to bring up here is being organized.
And flexible.
Organized and flexible. Yeah. So knowing what you need. Mm-hmm. And being willing to sacrifice a want to make sure that you get the need. And keeping those goals like very focused. So if you start to look over your budget or outside of the range of payment, what tends to happen is it gets really confusing. Mm-hmm. And I think it's important that you stick to the budget that the loan officer helped you come up with. Mm-hmm. And then keep an eye on those needs versus the wants. So if you happen to find a 3-bedroom, 2-bath pool home, great. In your price range, but if not, you're willing to give up that pool to make sure you have the bedroom count.
Yeah. Or, you may give up the pool to be in a better neighborhood.
Yeah. Yep.
Right? You can always put a pool in later.
So one of the other things that I hear a lot of realtors point out to me is that once they put you on the MLS search, it's best to look inside the portal that your loan or your real estate agent has assigned to you, because it's the most up-to-date information.
Yes. Don't go to Zillow or Trulia or whatever. Use that portal because you can organize the ones you like based on the likes and the not likes.
You leave notes.
You can, like for me, when I find a home, the first thing I'm like is, well, okay, I love this one. Call your loan originator and be like, hey, I really love 123 Main Street. Can you run my payments and my cash to close for that property?
Yep.
And your loan originator, if they're a really good one, as long as they know the address and the purchase price, they can provide you with a pretty good estimate on payment. Now, what they're not going to know is insurance, right? Because you have to provide them with a quote. But based on their hundreds of transactions a year, they will be able to provide a pretty good estimate of how much the payment is.
Oh, yeah.
And the cash to close.
Which really helps you make sure you're staying inside that budget.
Not only that, then you go out and visit that house, and it's your dream house. You know exactly what it's going to cost a month. You know exactly what your cash to close is going to be. And you no longer have that, I wonder, right?
So under it, we have, under shopping for homes, make your needs list, use your whys, stick to your budget. Don't get emotionally attached.
Oh,
that's like
hard.
the worst.
It's so hard.
Yeah.
It's hard for me because the first time I brought my son through a home, imagine like you open the door and the first thing the kid is like, where's my bedroom? Which one's my bedroom? And he runs around and he finds the biggest bedroom with the nicest bathroom. And he's like, Daddy, that's my bedroom.
The next thing you know, you're sleeping in the guest room.
Next thing you know, I'm sleeping in the guest room. Right. But don't get emotionally attached.
Yeah. Because it's easier to negotiate, right? If you're not emotionally attached, when you're going to make your offer, you're thinking more level-headed. You're thinking strategically and not emotionally. So that's good. So don't move too fast or too slow, depending on the market. So if you're in a buyer's market, you have time, right? You can negotiate a little more. But right now we're still in a seller's market.
Time is everything.
Time is everything. So you want to be prepared. You find that dream home. You want to have made sure that you went through the steps of getting your approval. You're sticking inside those pre-approval ranges that your loan officer has given you. And you can even take it a step farther and use our Almost Home product and have your underwriting done prior to putting in your offer, so your offer's stronger.
Which is a whole nother podcast.
Yeah.
The Almost Home pre-approval. You're through underwriting, add a contract and insurance and an appraisal, and we're done. But let's stay on course here. I think when you're talking about how fast or slow you should move on a property, you should leverage the advice of your professional real estate agent, your full-time professional real estate agent, because they know the market, they know what's going on, and they know how fast you have to act.
And some of the things that the realtor is going to do for you are like, it's not just writing the offer. It's writing the offer, negotiating the terms. So a lot of times people think that the terms are just the purchase price, but it's not always just the purchase price.
Inspection periods,
financial contingency periods, close times, maybe seller concessions to help you with some closing costs.
And talking about speed, if your agent says we have to see this house tonight at 6:00 and you're like, I'm not available till next Saturday at 4 p.m., your agent's going to just tell you this house won't be available.
Yeah.
Right. You have to leverage the knowledge of your agent. And it might be more important than your time at Chili's during happy hour tonight.
Yeah.
You may have to make some sacrifices.
Yep.
Even though those margaritas, Presidente margaritas, woof, man, those are good.
So skip the Presidentes and go see that house so that it's there when you're ready to make the offer. But the agent's going to be negotiating things like we were talking about, the appraisal period, the inspection period, the closing date. Maybe if there's a repair or two or something that you wanted added, that's sometimes added to a contract. And then the contract kind of acts as a roadmap for the transaction. It gives us a timeline that we have to stick to and deliver a closing to the seller by XYZ time. So it's a roadmap of the whole entire transaction.
But this is not a roadmap that you could just step off to go to Wawa. It's a legal binding contract.
Right.
And you have to, again, leverage the advice of your real estate agent. When that contract says you have to put an earnest money deposit down within 3 business days, you have to put an earnest money deposit down within 3 business days.
Yeah.
It's not optional.
Yeah. So that's one of the things that knowing the process before you go shopping and understanding what once you sign that contract, what you're legally obligated to do to perform on that contract is important. And so having that full-time professional real estate agent to guide you and loan officer to guide you is super important. Once you're under contract, so you're going to get your contract over to your loan officer.
Yeah. So the loan originator should immediately work on providing you with loan disclosures so you know exactly how the loan looks. At the point of contract, the only thing unknown probably will be insurance, because you may need inspections in order to get insurance quotes. But the loan originator, within a 24-hour period in my world, will provide you with loan disclosures. You will sign the loan disclosures. They will update any documents that are now stale because of time.
Yep.
And they will immediately prepare your loan for underwriting, which is, people get a big scary word, underwriting, right? It's basically the person who writes the check in the mortgage industry. What they're doing is reviewing all the documents. So on your application, you said you made $60,000 a year. They're looking at your pay stub and your W-2 to verify. They're inspecting what they expect.
Yep. So they're looking for anything that could hinder your ability to repay the loan, basically.
What if that pay stub has a payroll deduction for an employee loan that they didn't disclose on their application?
Yeah. So those are the things they're looking at. They're validating, and I call it scrubbing the documents. But they're looking to make sure that you're meeting all the guidelines and that you have the ability to repay the loan.
Under contract.
So you go under contract. You get the copy of the contract over to your loan officer. What happens next?
All right. So a really good loan officer will provide you with all of your loan disclosures within the first 24 hours. So loan disclosures sounds really scary, but really all it is your application that you filled out up front, along with a bunch of government required disclosures. Let's call it the right to receive a copy of your appraisal and Equal Credit Opportunity Act, all the things that the government got involved in lending and are requiring us to do, right? Okay, so you will electronically sign that most of the time. Some of the times you will physically go into an office and meet with a loan originator. Mm-hmm. He or she will walk you through the documents, and you will sign them with one of these. For the younger kids, this is a pen.
Pen?
We use this, to sign
Sometimes
documents.
Oh, yeah.
But you can...
And this is paper.
Yeah, you can electronically sign this application, and that's the way I would do it. Okay, so within the first 24 hours, your loan originator has provided you the loan disclosures. They have waited for you to electronically sign them. They may have asked you for new documents because your pay stubs may have aged. Like a couple months have gone by until you found a home, right?
I thought you meant aged like you had.
I've definitely aged. No. So if time has passed since you provided pay stubs, they may ask you for updated ones so that we have the most recent information, right? So once you've electronically signed your application, you've provided updated documents, they'll move your loan to a processor of some sort, who this processor, may be a male or female, will most likely order your title immediately because you want to make sure the home you're buying has a free and clear and marketable title, right? They will most likely order your appraisal if you need one. About 92% of the mortgage loans originated in this office need an appraisal. Mm-hmm. And they will prepare your loan for underwriting.
So then it goes into underwriting, and the underwriter reviews all the documentation that's been given to them.
So who's an underwriter, and why are they important, and why are they looking at my documents?
So the underwriter is put into the transaction to make sure that you have the ability to repay. So what they're looking at is all the documents you've supplied. They're validating the information you put on your application. So like if you said you made $60,000, they're looking for your W-2 and your pay stub to support that. They're looking for any like missing dotted I's or crossed T's. So they're looking at everything and saying, okay, this person, A, the information they gave us on the application all checks out. It's verified. B, we're looking for any additional things that may not have been disclosed, like child support or alimony. So we're looking at the pay stubs to make sure there's no garnishments or withdrawals that we need to know about. And then they're signing off and saying, okay, this loan meets Fannie Mae and Freddie Mac's guidelines or FHA's guidelines, and we can loan this person the money. So that first approval that comes out from an underwriter is called a conditional approval. And typically they've reviewed everything. They have a couple more questions. Sometimes the conditions are minimal, and other times, depending on the complexity of the file, it could be, a few items that the underwriter's asking for. But all the same, you're going to take that list of whatever they're asking for. We're going to meet all those conditions, and you're off to the clear to close.
All right. So a couple things. One, all my borrowers are like, well, what if the underwriter finds something? Are they going to deny me? Right. So let's just make it something easy. On my paycheck stub, I took out a payroll loan from my employer for $1,200, and I'm paying him $100 a month, and my loan originator missed it and the underwriter caught it. Does that mean I get denied?
It means that we have to add that $100 a month to our per pay period to your liabilities, depending on how much time you have left to pay on that loan. And it can change your approval, but we try not to deny. What we try to do is we look for alternative solutions. So if we had to add $100, is there somewhere else that possibly we could pay off a small credit card or something to make sure that we can get that loan to the closing table?
Right. So a lot of times, for me, let's say that $100 killed the deal. I would just be like, hey, it's, you owe $752.12.
Let's pay that off.
Can you just pay that off at closing? And then we would just have them bring an extra $752.12.
So underwriting isn't as scary as people make it sound.
No, it's like an additional roadmap to homeownership, except for you're going to do it now. Like you're at the finish line. We're doing this. You just got to get me these 4 things. Yeah. A lot of my customers are like, well, Vito, what's the underwriter going to condition me for? And normally my answer is, if I knew that up front, I would just ask you for it. It's their job to there's going to be a couple underwriters watching this. But it's their job to find something. That's what they get paid to do. So it might be a blurry driver's license. It might be as simple as provide a copy of an appraisal, which we've ordered and we're waiting for.
Or it might be something as simple as a letter to explain maybe an address that appeared on your credit report.
Or your driver's license.
Yeah.
So the address 123 Main Street is my mom and dad's address. I have no ownership interest. Sign and date.
Yeah.
Like when we ask you for a letter of explanation, you're going to get scared. And then I'm going to say, write exactly these words on it. And you're going to be like, that's not so bad.
Yeah. So that's not so bad at all. So now we've gotten the conditional approval. We've met the conditions. Underwriter clears the file to close. And that's a term we use in the mortgage industry.
Thank God. The clear to close is like the weight of your family is off of my shoulders and this loan is done.
Yep.
We are going to closing.
Yep. So a couple things that we were going to look for now is that a CD is going to go out. And we use acronyms a lot, and you just twitch.
Wait a minute.
What's a CD?
I thought we got rid of CD players.
We did.
This is, I don't even have a CD player in my car. And now you're going to give me a CD to buy a house?
Yep. And you've got to find a CD player, and then you have to listen to the instructions so that you can close.
I'm so confused. What is a CD?
So that is what we lovingly call the closing disclosure.
Oh, another document.
Yep. We love acronyms in the mortgage industry. So you're going to get your CD, your preliminary CD, and that has to be delivered to you no less than 3 business days prior to closing. It's a regulatory issue. So if you don't get that and don't acknowledge it,
you're not closing.
You're not closing. It'll be delayed. But that's never the final number now, is it?
No, that's just like the lender's final best guess at what the numbers are going to be. The actual title company, the closing agent, is going to work with the lender to prepare the final number for your cash to close.
I like to consider that like the marrying of all the fees. So the title company has their fees. They have any seller fees that need to be
credits
added.
From the seller.
Credits from the seller. So at the end of the process, the title company and our closing department start to communicate, and they basically merge the 2 CDs into one, and with a final number, and then they look to balance with each other.
And to take away the fear about the closing disclosure going out on time, we train our staff that the first second you can legally send that disclosure out, we send it out. We may send our closing disclosure out 2 weeks before closing, right? We're waiting for a few documents in order to prepare this correctly. We're not waiting until 3 days before closing, ever.
So now you're talking about, so we've got that final CD. What's a good thing for a first-time home buyer to do here? So we go over all the numbers, and we compare it to the LE to see where we stacked up. So I estimated you were going to have X amount of dollars to close, and we came in $3,000 less than
Wait.
Wait, what's an LE?
You just went from my CD to an LE, and now I'm super confused.
So that is loan estimate, and that was in the initial disclosure package.
Oh, okay. All right. So we're comparing what we thought you were going to look like at closing to what it actually looks like at closing. And in fact, it's as scary as this is in a mortgage transaction, the lender, once they disclose to you certain fees, they're legally not allowed to change them.
Yep.
So they should look a lot alike. Things like insurance, it's probably going to change, right? Because we're just guessing up front and we're telling you. But if we tell you an appraisal is going to cost $500 up front, it's going to cost $500 because we can't change that number. If we tell you your credit report's going to be 100, it's not going to be 120. It's going to be
100.
And you know what? If the actual bill is only $89.52, we can't charge a penny more. It's illegal.
Nope. So it kind of keeps us honest.
Lots of we's.
Yeah.
No he's and she's. Okay. So now
I'm so sorry. You have so much to edit.
Now wait. Now it's 3 days before closing. You've signed. You've gotten numbers from the title company. So now is time to start thinking about a final walkthrough with your real estate agent, and they're going to hold your hand there. And I think for me, the final walkthrough is I'm being delivered this house in the condition that I expect it to be. So there wasn't like, back in 2007, what was the thing that happened a day before closing? Someone would steal your air conditioner.
Or rip out the kitchen.
Or the appliances. It doesn't really happen today. I mean, when was the last time you had something happen at a walkthrough besides your own property? Well, it was about a week ago. No, I'm looking for the house to be in the condition I expect it to be.
So you went to see the house, and the house had a
furniture,
refrigerator, it had a stove, it had a dishwasher. The walkthrough is basically to just go back into the house, make sure that everything is where it was, like you're purchasing what you thought you were purchasing. Yep. They haven't removed
no
something.
New damage.
Yeah.
Someone didn't move in.
Hasn't been flooded. Hasn't been struck by lightning.
So when do we do this? Like for me, it's as close to the date and the hour of closing as possible.
So they're going to coordinate that with their realtor, but usually it's the day before.
Or the morning of.
The morning of closing. And they're just going to walk through and make sure that it looks the way they want it to. And then off they go to the title company, right?
Well, wait, before you go to the title company, what if you have cash to close? Are you physically bringing a suitcase?
Yes.
With money in it?
Yes.
Like physical $100 bills?
Yes. And you just swim in them on the closing table.
You're like, don't show up to the closing table with physical cash or even your checkbook. Because believe it or not, they don't want your check.
No, they want you to wire directly to the closing company or to the title company. So one of the things that you're thinking about here too is we have a lot of fraud that happens in terms of people stealing identity. So you don't want to take the wiring instructions for the title company through an email. And if you do get those numbers through an email, you always want to pick up the phone and confirm that you have the proper wiring instructions to make sure that you're not wiring your money somewhere that you don't want to.
Like Madagascar.
Yeah.
Okay. One thing we definitely need to talk about is how do we get funds to the closing table, right? So who accepts those funds? First of all, it's not your mortgage loan officer. It's not your real estate agent. In the state of Florida, it's your title company.
Yep.
And in the state of Florida, your title company does not want you to bring $100 bills to closing.
Nope, they want a wire.
Well, that's not because they don't like hundreds and they're scared of them. It's not because they want 20s. It's because they want a wire. Mm-hmm. And a wire is typically sent the day before closing or the day of closing. It's sent from your bank directly to the title company. And your bank may require you to physically walk into their location. So you want to reach out to them, right?
That's one of the first things that our loan officer assistants check with the buyer and figure out if they're wiring, how they're wiring, check in on their wiring procedures for the lending institution they're with, and also figure out whether they're going to be in person for closing or if they're going to be a mail away. So those are details that
You said mail away.
What's
a mail away?
So basically, are you going to be at closing in person, or are we going to mail you the documents for you to meet with a notary and sign?
So I don't have to physically be where the house is to close?
No.
Oh.
No, not at all.
All right,
That's
cool.
pretty cool.
Right, so the wire's been sent. We've done our final walkthrough. The title company has us scheduled for a time. Mm-hmm. We go to the office. First of all, what do I need to bring with me? And what can I expect? Is this like a 5-hour thing? Tell me a little bit about
45 minutes, and you're going to need to bring a copy of your driver's license so that you can validate your identity. Hello, in English. And then also, if you are married and you're buying a primary in the state of Florida, you're going to need to have your spouse with you to sign off on the fact that you are mortgaging your primary residence.
Mortgaging a joint marital asset at this point.
Correct. So,
As my
you're
wife
going to
would
want to
say.
check with your loan officer and the title company to see what you need to bring. But most of the time, plan on your driver's license. And like I said, if you have a spouse and you're buying your primary in the state of Florida, you would need to bring your spouse.
Okay, so I've signed through my 100 documents, and my wire's been received by the title company.
Yep.
So what's next? Do I wait around, or do I get the keys to my house?
You should get the keys to your house within the hour. So there are things that can hold that up. One of the things would be like maybe a delay with the lender's wire. Sometimes that happens. Things get.
I haven't had that happen in
years.
8 years.
Yeah, years. It's been years, but it happens.
Yeah.
That happens. And
Wire gets lost.
Wire gets lost, and little things like that. Or maybe the seller's out of town and they haven't mailed back all their documents yet. So there are times where there's a delay between the time you physically sign.
So don't show up at the closing table with a moving truck and 7 movers who are being paid hourly.
It's always best to wait to make those plans until after you've closed.
Physically closed.
Yeah.
Right.
So if you're planning to have like painters come in or movers, if you know you're closing on a Friday, maybe set that up for a Monday or a Tuesday to make sure that there's enough time for any, last minute snafus to be addressed. Very rarely happens, but it sucks when you're the guy with the moving truck.
Yeah. And or the guy paying the mover.
Yeah. So you got your keys. Your family's moving into their new home.
The children have the bedroom they picked out,
and you've
hopefully.
done all of this from day 1 to day 30, 35 at the highest end. I mean, really, truly, you can get all of this done inside of a 30-day window. So it's a lot to go through. But if you have everything organized, you have your documents ready for your loan officer, you have your needs and wants list built for that realtor so that you can really hone in on what type of property you want to buy.
Can I give you my biggest piece of advice for buying a home and to make it a smooth transaction?
Mm-hmm.
The people you surround yourself by and you trust are rather going to make this transaction easy or hard. And I could tell you on our end, our whole team is trained that they are to hold your hand from the first conversation until the time they get their keys. We have done this hundreds, some of us thousands of times. We know what to look for. We know where the hills, the valleys, and the mountains will be. And we try and resolve all of these problems.
Hills, valleys, mountains, caverns.
Well, I mean, the fact is,
deserts.
Let me ask you a question. In reality, in the mortgage business, when you're taking an application, is your brain trying to solve all the problems that you're hearing come out of that borrower's mouth?
Oh yeah, you're like check.
Yep. As soon as they go down a path, my brain is trying to figure out how to solve a problem. You don't even know it's a problem,
but I've already figured out.
But I've already figured out how to solve the problem.
Yep. You've gotten the keys. It wasn't so scary. Telling your friends and your family, it's not as scary as they think to buy their first home. And you need that great loan officer. You need that great real estate agent. And we have a team here at Community Lending that'd be happy to help you with any of your mortgage needs. Or if you have questions about how to get started, definitely call the office anytime, right?
Yeah, or visit the website at communitylendingfl.com. You will find all of our team members.
Yep.
I can tell you that I would trust anyone on this team with my own grandmother's loan. I think we all really care more about the families than we do about the transaction. And we are going to hold your hand and guide you in the right direction.
I think it's important too to recognize that you can compare lenders. So if you started working with somebody and you just need a second opinion or you need a question answered, we like to put ourselves out there for all of that, right?
Absolutely.
So if you're struggling with understanding the way someone's explaining something to you, sometimes it's just a different viewpoint. So if you ever have any questions about buying your first home or your step-up home or who to use for a real estate agent and or insurance, give us a call, right? 239-333-4684.
333-4684.
Mm-hmm.
All right. Thanks, everybody, and have a good day.
Yeah.